Hello everyone, this is Riya Singh, the currency analyst for Nirmal Bank. So let's look at the rupee outlook for the coming sessions. Now before discussing rupee, I think a light on the dollar is very important to lay a path in order for determining the momentum of the rupee in the coming sessions. Now if you look at the dollar index and the dollar overall, we are seeing quite a weakness into the dollar right now. This is probably because of the risk appetite, which has been underpinned by the hopes of a new U.S. stimulus deal, the confirmation of Joe Biden's presidential victory, as well as the introduction of vaccine into the U.S. right now. Now, the major lookout that will be there for the dollar into the coming days will be obviously the Fed meet that is to be held tomorrow. This will, the Federal Reserve will start working on the case for more stimulus to support the U.S. economy in the coming sessions as it held its finest policy meet for the year. Now, what can be expected from the Fed into this meet is definitely expansion of the quantitative easing program, because they have been going forward with aggressively with purchasing lots of bond and mortgage-backed securities amounting to around $40 billion into the quantitative easing program that they have held before. And looking at the overall numbers that have been coming forward from the US side and the risk of recent surge in the COVID-19 cases, I think there will be much expansion that will be extended towards this quantitative easing, because obviously a surge in the COVID-19 cases will definitely curb the broader economic recovery. And right now, Fed is aggressively working towards the fundamentals that will get the recovery back on track for the U.S. economy. So I think a new fiscal stimulus will be on the cards, and broader quantitative easing is something that can be expected from the Fed in tomorrow's meet. Taking consideration into the rupee, now if you look at the overall momentum of the rupee, it has been quite relentless from the start of this month. It has been into a wider range, but into a sideways consolidation. Though we have seen such a drastic weakness into the dollar index, but the Indian rupee has still been, down around 3% for the year as compared to the other Asian currencies. The reason behind the rupee weakness and the path to appreciate such a slow take on the appreciation is probably because RBI has bought around $58 billion. $58 billion into the forex for the first 9 months of the current pandemic. Since the pandemic has started as a response of its intervention, and this intervention is one of the major reasons why we are not seeing a drastic appreciation momentum into the rupee. Now, but if you look at the current momentum into the rupee and the behavior of the trading sessions, we are not seeing it again testing the highs of 75 and beyond. Now, reason why this is because we are seeing quite a modest gain into the rupee in the recent sessions because of the inflows. There have been quite a good inflows that we are currently witnessing into the domestic capital market. There has been a good there has been quite a uptick into the capital markets, as well as if you look at the overall performance of the IPO and such, the foreign inflows have remained quite generous into the recent sessions. The global investors have poured around 50 billion into the stocks and stakes into the company. So what this has done is it has boosted the rupee liquidity, not only into the domestic market, but also into the banking system, which was already flushed with liquidity from the RBI side. And the most stimulus measures that we have seen with the bond buying and such actions from the RBI is again boosting this liquidity. And the pressure of this liquidity is now put on the money market, the bond market. And obviously, when there is such a drastic inflow, the RBI loses its grip on the curtailing, on the bond purchase market and with its intervention in deciding the trend of the rupee. So I think if there is if the forex flows continue to improve, RBI may lose its grip from controlling the rupee momentum, and we can see good appreciation into the coming days. Even if you look at the RBI statement, they are currently, they have the governor has said that the forex volatility, they are trying to keep the forex volatility and the momentum of the rupee in sync with the underlying domestic fundamentals. And the underlying domestic fundamentals, such as economic numbers and such, have not proven quite satisfactory. And thus, with obviously, if the central bank loses its grip on the intervention, we can see rupee appreciating towards as far as 73, 70 to 50 as well on a shorter term. So going forward, I think the strategy that one can rely onto is either going short at a higher high. We are definitely seeing 75 as a set resistance on a longer term, and we are not currently witnessing, or forecasting momentum beyond 75, even if there is a sudden bullish surge into the momentum. So 75 is a set resistance for the coming days, and we can definitely go for a short on the higher highs around 74, 74.50. Or we can go short into the rupee for the trading part below 73.50 for a target of 73 with stop loss at 73.75. This is the rupee view from the Nirmal Bank side. Thank you for listening.